Y'all take a look right here. Oh, actually, this ain't him. I got about 2 or 3 animals that look like this, but I was actually looking at them last night. I was looking real close at him, and I got one that looks just like this, but he got a bigger ear on him. He's got a little bit of a bigger ear on him, and he is just a little bit bigger than this one. And so this animal right here, this is the size of animal that I'm going to be taking to market this week. And I was actually taking a look at my herd, and I am going to be taking 4 animals to market this week. I do have 4 animals out here that are just about $650. But you see this one right here, I have one that looks just like him. I actually last night I was looking at him and I was like, wait, is that him? But that's not him. He looks just like him, but he's got a little bit of a bigger ear on him. The one that I'm taking to market this week has a little bit of a bigger ear on him, and he's a little bit bigger than this one. And so I do have 4 animals that when I take a look at the 4 animals, their average weights are going to be about 650. And I'm gonna go ahead and take the 4 animals to market. I was taking a real hard look at them last night because tomorrow morning I gotta go and take the animals to the sale barn tomorrow, and I'm gonna be taking animals over to the new field tomorrow as well. You know, I'm gonna be taking animals over to the lease property. And so this morning I went to the vet, and one of the animals was kind of coughing a little weird, and this animal, I had given her a shot of Baytril, or not Baytril, I gave her a shot of Tenatril, which is effectively just a generic version of Baytril. It's an enrofloxacin, and I gave her that shot about a week ago, and I was like, you know, or not a week ago, maybe you know, it's, you know, whatever, you know, and you know, I think it's been about it's been about 3 or 5 days or something like that, 3 to 5 days, and I gave her that shot of Baytril, or not Baytril, enrofloxacin, which is you know, I gave her a shot of Tenatril, technically, which is just a generic version of Baytril. And I took her temperature at the vet this morning, you know, because I was like, you know, she kind of coughing a little weird, and so I went ahead and got her temperature taken this morning, and she's running a little hot. And so I went ahead and just put her in an isolation pen by herself. I gave her she got another shot of antibiotics this morning, and she got put in an isolation pen by herself. And the big white Charolais steer, the big white Charolais animal that I have in the front yard, you know, I was like, you know, something just kind of, you know, this animal, I'm not exactly sure. I gave him a shot of enrofloxacin as well. Those were actually the 2 animals that I gave a shot. You know, I gave a shot of the both of them. You know, I gave a shot to the other one and the shot. These 2 animals were the ones that I actually gave a shot to about 3 or 5 days ago. And when I took him over there, the guy was like, when he was loading them up, he was like, this one, I'm not sure, you know, someone just kind of doesn't whatever, and you know, and I thought the same thing. So I went ahead and I was like, you know what, I thought the same thing. I was like, you know, something just kind of wonky with this animal, and so I went ahead and put him in in another isolation space by himself too. So I have them 2 separated from each other, and I have them both in an isolation space away from the rest of the herd. And I vaccinated the rest of them this morning. I got the rest of them a vaccination this morning. I dewormed them this morning, and I gave them a nasal gin, and then I gave them a black leg vaccination. And so all the animals are ready to go. You know, I was taking a look at my herd yesterday, and I took a good hard look at the animals, because tomorrow I got to take animals to the sale barn. And you know, I'm going to be liquidating about 4 animals. I am going to be liquidating 4 animals. That's the plan right now. You know, I took a good hard look at them, and I would say that the 4 animals are going to weigh about 650, and they're conditioned. They're conditioned properly and everything. So I'm going to go ahead and take the 4 animals to market. And so in my situation right now, you know, I'll probably have enough money to buy and I'll probably have enough money to buy 10 or 11 animals. And so I got to figure out what I'm going to do, because, you know, I really, you know, and I talk about, you know, but I was like, you know, I only have a certain amount of animals that I can put in the preconditioning pen. And, you know, a lot of these animals are actually going to be going over to the lease property. And so I can, you know, I can precondition more animals here. But you know, I don't think, I would not reasonably anticipate that I can precondition more than 10 animals at a time. Not properly, right? Not properly. And so, you know, I got to figure out what I'm going to do, because I also don't want to be in a situation where I'm just sitting around with $5,000 cash, right? I don't want $5,000 cash Because here, I don't need another $5,000 cash, right? I mean, I don't need another 5,000. I already have whatever. What's it gonna do, right? I have 30 grand and now I have 35 grand. What's that gonna do, right? It's not gonna do anything, right? Why would I bring home 5,000 more dollars? It's not gonna do anything. It's like, oh man, now I had 30,000 and now I have 35,000. It's not gonna do anything, right? And so I gotta think about, what am I gonna do with the money? I was taking a look at the stock market, and I actually think that the stock market, the evaluation for the stock market right now is very good in terms of this is a very good opportunity to start buying into the market. All right, if you've been looking for an opportunity to buy into the markets and you're like, this, I would start saying that, I actually, when I took a look at the stock market, I actually thought that evaluations were so good that I purchased option contracts instead of just flat out buying shares. That's what I think. All right, I think that evaluations are very good. I don't see the economy, whatever. I don't see the economy going into oblivion or anything. I mean, there would have to be some sort of some major credit crisis. If there was some kind of a major credit crisis, if there is some kind of a massive liquidity squeeze, then, and if I see it, then I will tell you. But as tariffs are not going to crash the economy, okay? If there was one thing that President Trump knows how to do very well, it is run a business, okay? President Trump probably knows how to run a business better than any president that has, probably ever existed. I mean, the economy's probably going to do very good, okay? You don't have to worry about that. I would not be worried, okay? And I've talked about this all the time, in terms of assets, and it's like, what's the whole idea of assets and why do you want assets? And and I guess I haven't talked about it in a while, but the whole idea of assets is, why do you want good assets that produce a positive return? Why are you looking for a large equity assets? Why are you, why would I suggest that you go and do these things? Because if you do not have assets that produce you a positive return, what's going to end up happening is that you're going to have to work for every dollar that you have. And the moment that you stop working, you will have no money. That's what's going to happen. Your life is not going to turn into a magical adventure because you have no assets. There is no scraping out the bottom forever. You either have a lot, nobody is a money magician. All right, you're not going to be able to scrape out the bottom forever. It doesn't matter how you're putting it. Oh my God, well, if I collect Social Security and I'm on welfare in 10 years, there will probably be 25% inflation over the next 10 years, and then you're screwed. That's what's going to happen if you're scraping out the bottom. It doesn't work out. All right, it's not going to turn into a magical adventure. What's actually going to happen is you're going to have to work for every dollar that you have. You're not really going to make anything your entire life. You're going to pay the most in taxes, and then and then the moment you stop working, you will have no money. That's what's actually going to happen. Okay, I'm just being completely straightforward with you. All right, if you don't have any assets, I mean, then number one, you're probably going to be paying the most in taxes out of anybody in terms of a percentage of your income. You are going to pay the most in taxes. All right, the moment you stop working, you will have no money, and then you're going to die poor. All right, that's what's actually going to happen. Your life is not going to turn into a Disneyland adventure because whatever, right? You were scraping out the bottom for a long time. That's what's actually going to happen, okay? And the whole thing about the U.S. economy, and I talk about the U.S. economy in terms of money. You have money, and then you have assets, right? You have goods and you have services, and usually these goods and services are tied to a business. And if that business produces money, that business is now equitable as well as a multiple of the earnings, right? Very simple, not a difficult concept. If you have a business that produces a service and you make a certain amount of money, that business is worth a multiple of that money, depending on what direction that business is headed. If the business is headed for a higher direction, then the multiple becomes higher. Very simple, right? Very simple. It's not complicated. All right, and so what we're in a situation right now, the situation that we're in right now, from this is just from my best knowledge. I keep a good eye on the economy all the time. Okay, I keep a very good eye on the economy. I'm trading commodities effectively. My entire business revolves around trading commodities and equity and et cetera, et cetera. Okay, and so the whole situation right now is that we're in a situation where effectively the central bank and the government but I mean I'm not because at the end of the day I've always said, on the other side of things, you should also understand that the results are what they are. Okay, all right, the results are what they are. The quality of life for people in America, even if you're poor, is drastically higher than anywhere else. Okay, you got to consider all of these things for what they are. I'm not a politician. All right, and at the end of the day, I'm not a dictator. All right, I'm just saying that this is what I see. Because in that, if there is, so we have money and then we have assets. All right, we have money and then we have assets, and the whole situation with the big monetary plan, with the big monetary situation, is that there can be an increase in the amount of money supply. The amount of money supply, if we legitimately enter a situation where asset evaluations look like they are going to tank, if we are legitimately in a situation where broader assets look like they are going to go downhill very quickly, the central bank will legitimately take interest rates to borderline zero or maybe even negative, and then they will print trillions of dollars. But the big problem with this, and also the government is also deficit spending. The government is actually borrowing money and adding money to the money supply. That is a part of the government program. The government is legitimately expanding the money supply. And I've already talked about this. President Trump, will inflation be lower with President Trump? It probably will. Will it go negative? It probably won't. And if it looks like the broader economy is going to go negative, we may legitimately end up in a situation where interest rates go borderline zero or negative and trillions of dollars get pumped into the economy. And if that happens, what will happen is the amount of money supply will vastly exceed the growth of the assets. That's what's going to happen. And when that happens, what happens? The assets that already exist go up in value. That's what happens. All right, when you're holding on, and I talk about this in terms of Coca-Cola, right? I talked about this in terms of Coca-Cola. I talked about this in terms of renting an apartment. I talk about these things in many various ways, right? Even cattle, right? The same exact animal is probably going to be worth more money in the future, in the long term, because you cannot just print assets into existence. You cannot do that. It doesn't work out. Can you print money into existence? Sure you can. You can print money into existence, but the number of assets are not going to grow at that rate. That's what's happening. All right, that's what I see happening. All right, and and in this situation, how do is everything unfair, and is in what right? No, it's not. How do you get ahead of this situation? You hold on to good assets. The S&P 500 is a very good example of this. All right, you hold on to good assets. The S&P 500 is a very good example of this, okay? The S&P 500 is effectively a small portion of the 500 biggest companies in America, and it produces a dividend. All right, and if you wake up one day and the S&P 500 legitimately goes down 50%, then go to the bank and borrow money. The overall asset economy is effectively counterbalanced by the interest rate. You can probably borrow money for borderline free. All right, but if something like that looks like it is legitimately going to happen, then there will very well possibly be trillions of dollars of deficit spending, legitimately trillions of dollars pumped into the economy. And if that happens and you're not holding on to any assets, and then you're screwed, you're boned. You're legitimately going to get freaking wrecked. That's what's going to happen. Is your life going to turn into a magical journey? No, it's not. You're legitimately just going to get left for dead. All right, that's what's going to happen. All right, you're going to get completely left behind. You will have no money, and it will become even worse. That's what's actually going to happen. All right, and this is also why I am so against stimulus spending, right? Do I look like I want a $5,000 check from the government? I don't want a $5,000 check from the government. If you legitimately are in a situation where you think $5,000 is going to help you, then, you need to go and do something else. All right, go figure it out. All right, go and figure it out. I mean, if you made $400 a month, that would be $5,000. All right, but that's why I am so against stimulus spending. And at the end of the day, I get to, free country, I get to say what I want. All right, if I think that the central bank is communist, and I think that stimulus spending is communism money, then I get to say it, right? I mean, this isn't some dictator country, right? And at the end of the day, I also understand that I don't whatever I don't whatever I don't my say is not the whatever, right? It's not law. All right, I also understand that with this sort of financial system, we have been able to grow the American economy very, 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 very well, right? I understand that. There have been many improvements, right? There have been drastic improvements in the quality of human life over the last, over the last century. There have been drastic increases, drastic improvements in the quality of human life. I understand that. All right, that's the other side of the argument. All right, but at the end of the day, that's what's gonna happen. That's what I see happening. That I'm not a fear monger either, right? I'm not a fear mongerer, right? Whatever. I'm not like a doomsday person. I'm just telling you that is what I see happening, okay? And the most realistic way for me to put this is, imagine having a can of Coca-Cola today and it's $1. There is a very real possibility that can of Coca-Cola will actually be $1.25 in 10 years. If you are paying $1,000 a month for rent, there is a very real possibility that your rent will be $1,200 a month in 10 years, and you will effectively have the same exact apartment, and you will be drinking the same exact Coca-Cola. That's effectively what I'm talking about. All right, and if you're in a situation, especially, okay, people who are on a fixed income get wrecked the most. If you don't have any assets, the people who do not have any assets, even if the asset market cuts in half, it doesn't matter. The broader asset market is tied to the interest rate. It doesn't matter. You are still better off holding on to assets. I guarantee it. You are still better off holding on to assets. And if you don't hold on to assets and you decide that, oh, well, I'm just going to go run off in the 180 degrees in the other direction for no reason, what's actually going to happen? Is your life going to turn into a magical journey? No, your life is not going to turn into a magical journey. You're going to have to work for every dollar that you have. And the moment that you stop working, you will have no money. And that could legitimately be you ending up at 75 years old working at a grocery store because you can't retire. It might legitimately end up with you at 65 living off of Social Security, and then by the time you wake up and you're 85, you have nothing. That's what it looks like. All right, it's not funny. I legitimately, I've seen this happen a lot, and it's gonna happen to a lot of people again, continuously, forever. I don't know how well. I'm just giving you my realistic perspective. All right, when it comes to money, I mean, I do very well for myself financially. In terms of numerical information, I do drastically better than 99.99999% of the entire country. I do drastically better. It's not even close. All right, and if you actually take a look at it, I think it's like 0.1% of the U.S. population even have a net worth of $5 million, and I generated that net worth over about a year, and I'm actually going to double that over the next 5 months. All right, and I'm not saying that to brag. I'm just telling you, it's a fact, and you probably have never even seen it before. I mean, it is what it is. At the end of the day, I'm the one with the money. I make a boatload of money. I don't even know how much money I make. I don't. I do very well for myself. I don't even worry about money. At the end of the day, why would I care? All right, and I'm not saying that to be a horrible, malicious person. Why would I care? If it comes down to it, I'll just be rich by myself. All right, what does it matter to me? All right, and and if we're going to talk about assets and the generation of money, and et cetera, in my financial situation, with the way that I, utilize money, this is a very realistic way for me to put it. When I fall asleep at night, and I actually spoke about this, when I fall asleep at night and then I wake up 8 hours later, I will have actually made myself about $5,000 to $10,000 in that 8 hours that I was asleep. My net worth will have gone up by about $5,000 to $10,000 in the 8 hours that I was asleep. That's what happens when you utilize your money for assets, when you collect assets, and I can effectively just grow my wealth tax-free because I am effectively just trading commodities. All right, that's another way to put it. And it's like think about it like that. If you're working a job, and you're not collecting, and you're not putting assets together, and you're not thinking about investing into assets. Think about it like that. If you fell asleep and then you woke up 8 hours later, how much money would you have made? Right, practically nothing. Maybe you would have even lost money because your air conditioner was running while you slept. All right, maybe, whatever. I mean, you probably lost money in your sleep. Me, when I fall asleep and I wake up 8 hours later, I legitimately, my net worth will have gone up between five to $10,000 in that 8 hours. That's what money looks like for me. That's what happens when you put your money into assets and your assets appreciate, right? What is my asset, right? My biggest asset is my business. My business effectively revolves around trading commodities. Commodities are effectively a global standard. You can go on the stock market right now and look up the price of commodities, and they will just give you the price. You don't have to whatever. Legitimately, commodities are traded on a global standard, okay? There's an old saying, they're worth their weight in gold. That's commodities. Corn is worth its weight in gold, right? You pay for it by the pound. Cattle are worth their weight in gold. Gold is worth its weight in gold. There are many commodities out there. It's not just cattle, corn, and gold, right? I mean, silver, and there are many things, right? I mean, fertilizer is another commodity. Fertilizer is worth its weight in gold. There are many commodities. All right, but that's what money looks like for me. When I fall asleep and I wake up 8 hours later, I will legitimately have made myself between $5,000 and $10,000 while I slept. That's what money looks like for me. All right, and I've already told you, what am I going to do with the money? Am I going to go and buy myself a Lamborghini and a Rolex? And, no, I'm not going to do that. What am I going to do with my money? I'm going to grow my business. All right, I've already told you, over the next 6 months, what do I anticipate that I'm going to do? Well, I'll be liquidating animals, and I'm going to take that animal, and I'm going to take the money and reinvest it into my business, and I'm going to pay out a dividend. And, probably within about 5 months, I will actually have zero debt on my cattle. And when I have zero debt on my cattle, I'm just going to put a self-feeder out here, right? I found a local company that makes these self-feeders. I'm going to put a self-feeder out here and then just run whatever 20 cattle here at a time and put them on a self-feeder, put a line of credit against my property, right? I have this property, and this property is equitable, and I have money tied into this property, and I don't want to sell it. So how am I going to access the money? I'm going to go to the bank and open a line of credit against it. Right, very simple, right? If you have an equitable asset and you don't want to liquidate it, you can take it to the bank and they will appraise it for you, and then they will give you a line of credit against it by holding your asset as collateral. Very simple, right? It's not complicated. And so what am I going to do, right? Over the next 5 months, I will probably, I would anticipate that I double the size of my business by just reinvesting my earnings with no leverage. I'm going to clear up all of the debt on my cattle over those 5 months as well. And after I do that, I'm going to get a self-feeder. I'm going to put it here. I'm going to put the animals on the self-feeder, cash flow the property. Even when I'm not here, the property will cash flow. I will utilize that cash flow to cover the debt service. And then I will open a line of credit against this property, and then I will use that property, and then I will use that line of credit to buy myself, effectively as a down payment for a very large piece of property. That's what I'm going to do, right? That's the big plan. It's not complicated, right? I'm gonna take my property and I'm gonna show it to the bank. The bank will appraise it, and then I will say, give me a line of credit against it. They will tell me how much they're gonna give me. I will say, okay, thank you, and they will say, you will have to pay this much a month. Right, I'm gonna put a self-feeder out here, and I'm gonna grow the grass, and I'm just gonna leave animals out here. I'll go and get myself a big old truck and a big old cattle trailer, and then I'll just bring over 20 animals or something, right? And then I will cash flow the property. If I have the animals here and I have a self-feeder here, then I don't have to worry about being here every day to take care of the animals, right? And so that's going to produce me money. That's going to be the money that I use to pay the bank back for the loan that they gave me by holding this property as collateral. Very simple. And then I'm going to take that money and I'm going to use it as a down payment for a very big deal. That's the big idea, right? Very simple. All right, am I going to go and buy myself a Lamborghini and a Rolex and, no, I'm not going to do that. All right, what am I going to do with my money? I'm going to grow my business. I would realistically anticipate that I double the size of my business over the next 5 months. That's what, and I am going to be using zero leverage. I will not use any leverage at all. All right, that's what I see happening. All right, that's what I got coming up. I'm actually going to take 4 animals to market this week. The 4 animals are going to hit the scale at about $650. All right, I'm going to make some money, and I'm already sitting on about $2,100 as well. When I sell these 4 animals, I will probably have enough money to buy about 10 or 11, and I need to buy 6 to keep my herd whole, and then for the rest of the money, I actually need to pay out the dividend first, and then I can use the money to expand my herd. And when I expand my herd, that will be the new baseline for making my herd whole next month. Right, I don't really care about the dividend. I'm going to pay out the dividend, and then I'm going to grow my herd. I'm looking to keep money in the equity of my herd. All right, that's what I'm looking to do, and I have land as well. Right, and depending on what I'm looking to buy, if I'm looking to buy real estate, right, then depending on what I'm looking to, like if you or whoever, right, if somebody came up to me right now and was like, I got a 200 head of I got 1,000 head of 200 pound animals. I got 1,000 head of 250 pound animals, and they're half heifers and half steers. And if you wrote me a check for $1 million right now, and I also got a 500 acre property that you can, or I got a 1,000 acre property, and you can use the 1,000 acres, and if you write me a check for $1 million right now and pay me a 10% cash dividend, I will just let you run the cattle on my field, right? You can just run the cattle, and then I could write a check for $1 million, no problem. If I legitimately had a reason to do it, I could do it, no problem. It wouldn't even be a big problem. It wouldn't be anything to me. If something, if I was offered a good deal, I would take it. If it was, I could write a check for $1 million, no problem. All right, it won't matter. All right, no problem. I'm not worried about the money. And something like that, if that realistically happened, I could write a check for $1 million, no problem. All right, I got 1,000 head of 250 pound animals, and I got a 1,000 acre field. I got a lot on my plate right now, and so I just want to kind of outsource it to you. If you run the cattle on this field and pay for my 250 pound animals, then you give me your 10% cash dividend, then I will just let you use my field, and I'm going to go and do something else, and I'm just going to take here's your $1 million check, and I will pay you your 10% cash dividend. It doesn't matter to me, right? Because that's the deal that that's the thing about me, is that when I offer a deal to somebody, I really think about my deals, right? I really think about my deals. I don't just go, and then just, whatever, right? I really think about my deals. I carefully consider my deals, right? What do I do when somebody, what is a reasonable deal that I offer when somebody leases me their land? I pay out a 10% cash dividend on, I keep my herd whole, and then for the rest of the profits, I pay out a 10% cash dividend, right? That's what I do, right? And that's very good, right? I think about my deals very carefully. I think about my deals very thoroughly. I'm not just like, and then just, whatever, right? When I buy land, how do I do it? How am I going to do it? I'm going to open a line of credit against this one, put a self-feeder here, cash flow the property, and then use that cash flow to float the debt service. And then I'm going to take that line of credit as a down payment for a very big piece of property. That's very good, right? And then I can leverage the amount of, I can also leverage the money that I make. And if the bank will even hold my cattle as collateral, then I will let them hold my cattle as collateral too. I will have zero leverage on my herd within 5 months. If the bank wants to hold my cattle for collateral, if they're willing to do that, then they can even do that. I don't care. All right, whatever, right? And it's like if I have, whatever, right? If I have, if I have $700,000 worth of assets and I have $400,000 cash, then that's very good. I have $1.1 million of hard collateral, right? I can write a check for 400 grand. I have $700,000 worth of hard collateral, and I want to take a loan for 2 million. Well, I've already covered half of it. Well, that's very good, and I'm producing a net positive cash flow of about $10,000 to $15,000 a month. That's what I'm going to offer in terms of leveraging for the million. Very, very, very easy, right? It's a very good deal. Even if I fail, right? I mean, you can if they repossess my assets, they will take $1 million worth of hard assets and $700,000 worth of hard assets and $400,000 worth of cash, right? That's a very good deal for the bank too. And even if I lost everything, it wouldn't matter. I just redo it all again. I just file for bankruptcy and do it all again. And am I going to file for bankruptcy? No, I'm not. Right, I mean, knock on wood, I don't want to give myself bad juju, right? I mean, but is that the plan? No, it's not the plan, okay? Realistically, what's going to happen is that, next week I'm going to sell 4 animals, and when I sell these 4 animals and I put my money together, I'll probably have enough money to buy 10 or 11. If I continue to do this for the next 5 months, I will probably end up doubling the size of my business, and I'm not going to use any leverage. I will end up doubling the size of my business with zero debt. I can pay off all of my cattle debt, go and buy myself a self-feeder, leave the self-feeder here, go to the bank, open a line of credit against this property, hold this property for collateral, open a line of credit against this property, take that money, cash flow this property, use that money to float the debt, and then just take my loan and use it for a down payment on a giant piece of land. That's the big idea. That's the big idea, all right? That's what I've been telling you the same exact thing for probably 4 months now, 5 months. The plan has not changed. If the plan changes, I will tell you, okay? And so that's exactly the direction that I'm going. That's exactly what I'm going to do, more or less. And I was taking a hard look at my animals yesterday, and I got 4 animals that are about $650. I have 4 animals that are $650 as of right now. So I'm going to go ahead and I'm going to take them all to the sale barn. I'm gonna take the 4 to the sale barn this Monday, and I make a boatload of money. It doesn't matter how you want to look at it. It doesn't matter how you want to look at it. You whatever makes sense to you. Do whatever makes sense to you. Am I gonna go and buy myself a Lamborghini? Am I gonna go? If you want to think about it in terms of Lamborghinis, if instead of growing my business, I took that money and I bought myself Lamborghinis, how many Lamborghinis could I buy? I could probably buy 2, right? Something like 2. I mean, granted, I'm not going to go and buy the best Lamborghini on the market. All right, I mean, think about it, whatever makes sense to you. I'm going to double the size of my herd over the next 5 months. I'm looking to double the size of my herd over the next 5 months by reinvesting my earnings. Then if that makes sense to you, then think about it like that. All right, whatever makes sense to you, right? If money makes sense to you, think about it in terms of money. How much money do you think I'm going to make when I sell my 4 animals? I also have another $2,100 cash. If you put that all together, how much is it? And if I take that money and I buy animals, then how many animals am I going to buy? And if I sold 4 animals and I bought that many animals, how many animals would I have net positive, right? Whatever, right? I sold 4 and I bought 10. So I'd be net positive 6 animals. Out of those 10 animals, how many would have to die for me to just break even? 6. Right, as long as I don't lose more than 6, and granted that I already, I lost 2, right, and so, I lost 2, and so, granted that I don't lose 4 out of the 10, if I don't have a 40% death loss, then I'm still in the net positive. Very simple, right? And if I dip into the negative, how do I solve that? I spread the cost of the animal over the rest of the herd. Oh, maybe I should think about taking my animals from 650 to 675. Very simple, right? I've already answered all of these questions. It's not complicated. I did not change anything. All right, granted that I don't have a 40% death loss, I am still in the positive. All All right, that's another way to look at it. And, you know, and whatever makes sense to you, think about it in whatever way makes sense to you, okay? Whichever way, it doesn't matter. Whatever makes sense to you, think about it. If you legitimately think about it in terms of Lamborghinis and it makes more sense to you, then think about it in Lamborghinis. How many Lamborghinis could I buy if I did not grow my business and I just ran the thing sideways over the next 5 months? I could probably buy 2 Lamborghinis. All right, you know, whatever makes sense to you, think about it like that. Money is not complicated, and money is not an opinion. It's very simple. Money is not complicated, okay? Oh, and, you know, and that's it for me today, YouTube. Y'all have a good one.